What if you invested just $1,000 into Coca-Cola stock back in 1980? No hedge funds, no crypto hype, just fizzy drinks and compounding interest. How much would that be worth today? And how much passive income would it generate while you sip a cold Coke by the beach? 1980 wasn't just big hair and cassette tapes. It was the year Pac-Man was released. The Rubik's Cube hit toy store shelves, and inflation? Oh yeah, that was raging at 13.5%. The average American home cost about $68,000. Gas was 86 cents a gallon. And if you had $1,000, you probably weren't thinking, I should invest this in a soda company. But Coca-Cola wasn't just slinging sugary drinks. It was quietly gearing up to become a dividend-paying beast. All right, let's go time machine mode. January 1980. Coca-Cola stock, adjusted for splits, was trading at around $1.50 per share. So, with your $1,000 investment, you could have bought about 665 shares. Fast forward to today. Coca-Cola has split its stock 6 times since then. That's 2 for 1, 3 for 1. Splits. Corporate math gymnastics. Your original 665 shares would have magically turned into 10,656 shares. And you know what you had to do to make that happen? Absolutely nothing. No day trading, no options, no sleepless nights, refreshing a stock app. Just hold. Now here's where the magic kicks in. Coca-Cola didn't just grow. It paid you to own it. It's what investors lovingly call a dividend king, meaning it's raised its dividend for over 50 consecutive years. Think about that. Through Black Monday, the dot-com crash, the 2008 financial crisis, COVID, and countless recessions, Coca-Cola just kept paying up. In 1980, the dividend was around 10 cents per share annually. Today, it's over $2.04 per share, a 20 times increase just in dividend payouts. So let's talk numbers. With 10,656 shares today and a dividend of $2.04, you'd be earning $21,552 per year, just in dividends. That's over $1,796 per month, or about $59 per day, every day. That's like waking up and finding 2 $20 bills and some spare change on your nightstand, courtesy of Coca-Cola. And remember, your original $1,000 investment, those shares are now worth over $650,000. That's a 64,900% return. Try getting that from lottery tickets or your friend's NFT project. But wait, what if you didn't spend those dividends? What if, like a patient compounding wizard, you reinvested them every quarter? Thanks to the magic of dividend reinvestment plans, DRIPs, your shares would have multiplied even further. Instead of just owning 10,656 shares, you could now be sitting on over 18,000 shares, depending on the reinvestment schedule and price points. That would push your dividend income to over $36,000 per year. All for doing one thing, not spending your money like a 1980s rock star. Let's put this in perspective. If you bought $1,000 of Blockbuster in 1980, you'd have exactly $0 today. Invested in pets.com? Yeah, that sock puppet didn't age well either. But Coca-Cola? It just kept doing boring things. Selling drinks, building brand loyalty, and raising dividends every single year. Even Warren Buffett jumped on board. He bought $1 billion worth of Coca-Cola in 1988. And today, Berkshire Hathaway earns over $700 million per year, just in Coke dividends. Now let's talk mindset. Because this isn't just about numbers, it's about how people think. Most investors want instant wins. They chase hot stocks, Reddit trends, and crypto coins with dog faces. But the truth? Wealth is boring. It's about patience, discipline, and delayed gratification. The people who quietly invested in companies like Coca-Cola 40 years ago, they're not flashy, but their portfolios are flexing harder than any Lamborghini ever could. This Coca-Cola story teaches us a few things. Consistency beats excitement. Dividends are the most underrated form of passive income. The earlier you start, the crazier compounding becomes. And most importantly, you don't need to be a genius. You just need to pick companies that print cash, treat shareholders well, and have a business model that'll likely survive the next 40 years. Ask yourself this: what companies today are doing what Coca-Cola did in 1980? Those might be your next dividend legends. So the next time you crack open a Coke, take a moment. You could have turned one case of soda into a small fortune, because the real value isn't just in the drink, it's in the stock. Like, this kind of storytelling meets stock market content. Smash that subscribe button, tap the bell, and let's build wealth the wise way, one what if at a time. Drop a comment with the next company you want us to rewind the clock on. Pepsi? Apple? McDonald's? Let's find out what could have happened, hypothetically speaking.